Hi, I'm Barb Culver, president of Resonate Inc. in Cincinnati, Ohio. Thanks for joining me today. Due to the fact that we are now into the month of September, with October on its heels, I thought it might be helpful to share some ideas with you about what we might expect from the stock market over the next couple of months. September and October tend to be either the most volatile or the worst performing months of the years, historically speaking. Now, that doesn't mean that's what's going to happen this year. Of course, no one knows that. But when we do look back historically at these 2 months, we find a considerable amount of volatility and poor performance. Due to the fact that we are significantly overdue for a market correction, and by the way, by definition, a market correction means that the stock market goes down by 10% or more. That's technically a correction. So we're way overdue for a correction. As we enter into these volatile times, these volatile months, we're concerned that our clients might think, uh-oh, is it time to get out of the market? Do I need to do something? So I thought I'd share with you some opinions from people that we have come to trust in terms of their research and opinions over the years. As you know, you can find opinions about anything. You can find one person who says, oh yes, we're in a great bull market, and the next person will say you should sell everything and be in cash. You can find all kinds of opinions all the time. So the ones that I'm sharing with you today are from people that we literally have followed for 10 or 20 years. And we find that their research and their opinions tend to be accurate, tend to be reliable most of the time. So here we go. In his August newsletter, Jim Powell, who writes Global Changes and Opportunities, says, quote, "The stock market is likely to remain on a growth track for another year and perhaps longer," unquote. Another person that you may have seen on television or heard his name is Wharton professor Jeremy Siegel. On August the 5th of this year, Siegel appeared on CNBC, and he was also reiterating his call for a bull market. Siegel is noted for previously stating that the Dow could go to 20,000. Now, when he said that, some people thought, there's no way. But now that we've crested 17,000 in the Dow, people are beginning to pay a little more attention to his prediction. Siegel also noted that it's been a long time since we've had a correction, and he said, quote, "But the bull market is definitely not over," unquote. Bull markets can go on for another 9 months to 2 years after the Federal Reserve raises interest rates. Now that's interesting because a lot of people believe that when the Fed begins to raise interest rates, and by the way, another person whose opinion we find to be reliable is Steve Sugarrard. Steve says that the Fed will begin to raise rates in April of next year. Now, Janet Yellen and the board of directors at the Federal Reserve have a very delicate balancing act here because they have to judge when the economy is strong enough to stand on its own 2 legs to be able to withstand an increase in interest rates. If they get it right, and when we look back historically over the last 30 years, the interesting thing is that the market continues to go up even as interest rates are rising. So for example, the Fed raised interest rates from 2004 to 2006, and instead of falling, stocks rose 18% during that time frame. Now, also interestingly, when the Fed stopped raising rates, the stocks started to go down. The Fed raised rates again from 1999 to 2000. And during that period of time, stocks again rose by 10%. And once again, when the Fed stopped raising rates, stocks started to fall. If you look back over the last 30 years, you'll find a similar story, that stocks actually do tend to go up during periods of rising interest rates, again, assuming that the Fed gets it right, that the economy is strong enough to stand on its own two legs without having the additional support of very low and attractive interest rates. So our thinking is, if we hit some of the traditional volatility in September, and even if the market gives back some of its recent gains, we would encourage you not to get scared and decide to sell what you have invested in the stock market. Remember too that at Resonate we have you well diversified so that the equity portion of your portfolios are not just in United States stocks, but they're in stocks around the globe. So what happens in the United States doesn't necessarily happen, for example, in Europe or in China or in Canada or Australia. Another source that we've come to trust is Richard Mayberry, and he writes a newsletter called the Early Warning Report. In his August edition, Richard says, open quote, "Adopt a period of watchful waiting, but don't sell," close quote. So rest assured that we are doing the watching for you. If you want to talk to us, you know that we will welcome your phone calls at any time. And if there's anyone else that you know or you think might be concerned about his or her or their investment portfolios, please note that we would love to meet with them, talk with them also on a complimentary basis. Thank you again for your time today, and I hope that this information is useful and valuable to you. Please feel free to either look at our website or please call area 513-605-2500 and we'll be sure you get connected to the proper person. If you have any questions on this topic or anything else that you'd like to ask us, please feel free to contact us. And also remember that we are currently accepting a limited number of quality referrals to finish out this year and to begin next year. Thank you again for your time.